In this piece, our chief equity strategist and economist, John Blank, lays out 3 quarterly steps of analysis to undertake to improve and update the status of any investment mind. He's here to expand on that now. John, you've been both a public and private economist. For those who may not know, what is the difference?
Yeah, it's really simple, Terry. A public economist either works for the government or a nonprofit organization or some facsimile between the two. And a private economist, like I am working with you at this moment in time, is in a for-profit corporate entity.
So what are these 3 steps?
Yeah, what I like to do is, first off, I like to go to the Fred macro snapshot. It gives me 8 charts that I can get off the St. Louis Fed website, and I can take a look in real time at where the latest data is over a time series, not just reports that you get in the news media, which don't give you a sense for how things have moved over time. Things are always revised, and you always have a trend that you can look at. Another thing I like to do is I use our Chief Investment Officer survey at Zacks as a look outside of our company to people's ideas of how stocks were going to do, which gives me another baseline. And the third thing I like to do is use our heat map, which you can find online, Zacks.com. Industries that are strong are going to be where stocks are strong, and half the movement of the stock is based on its industry. So those are just how I keep myself, and clear out my attic every quarter with, new ideas about what's happening in the economy and within the stock market.
So this is all of the key macro data that you look at to help you execute these steps, right? There's more data within each of those steps, I'm assuming?
No, it's the key macro data is all in the first step, which is the Fred snapshot. Those are the 8 things: non-farm payrolls, GDP growth, personal consumption, things like that. So you can teach yourself a lot about the economy on your own without paying a dime, and then you can read any economist talking about any scenario and with some knowledge. That's a big step forward.
So is your approach then to merge both public, regularly collected high-level macro data and private intermediate data sources?
That is absolutely correct. I just laid it out for you, exactly what you want to do. You want to, at the high level, the government runs the economy. So they are the only entity with truly reliable data and a mission to keep track of it for their own use. And then down below, of course, private groups are involved in the financial markets, and they can get you all the way to your investments.
Can this approach also apply to analyzing the stock market as well as the economy?
The economy and the stock market are 2 different things. The stock market, like we're talking about, is largely a private entity that's regulated by the government. I mean, you have data coming into the SEC, but it's generally not distributed outside the SEC. And the economy actually is, through the Bureau of Economic Analysis, the Bureau of Labor Statistics, the census. You have a lot of data that's available that's for free. All you got to do is go online.
So to be clear, this approach is not giving you any picture on stocks right now.
No, it doesn't. I mean, yes, it does. I mean, the U.S. macro snapshot will never give you a view on stocks. The view on the intermediate view on the heat map will definitely give you some views on stocks.
So what is this approach saying about the U.S. economy for the near term?
It's telling you that we are in fine shape. We just had a GDP report of 2.8%, which matched what the Atlanta Fed thought was going to happen in days before. And in a typical long-term trend moment like we are in, we would get 2 to 2.1% growth out of the U.S. economy. So this is a strong U.S. economy on that measure.
Does some of the latest macroeconomic data concern you? I'm specifically referring to the decrease in the number of jobs open at the end of September. Investors have been watching for signs of a cooling labor market. Does that data reflect that?
No, well, it does reflect, lower job counts, but we've got the number here. We're talking October the 31st on a Thursday. Tomorrow, we will get new job numbers for the latest month, and that's where we'll get the real update.
Then on the flip side, there's a rise in consumer confidence for October. Does that and the latest retail sales data offer insight into the economy that is turning out to be far more resilient than many had expected, especially on the consumer level?
Yes, the retail sales data is confirming what any economist knows, that you can learn, like I said, from the macro snapshot on personal consumption expenditures, that retail sales are doing strong. Consumer confidence is 15% down from where it used to be before the pandemic, and that is largely because when you go out and find out that prices are 20-25% higher than they were before the pandemic, that kind of shocks people still. So they're two different issues. Consumer confidence is never going to be happy about high prices, but at the end of the day, the overall picture for retail sales at those high prices is still quite strong.
All right, let's look into two major mainland China large caps and one German multinational stock. Alibaba, BID, I guess that's how that's pronounced, BYD, and Siemens.
Right. So Alibaba's ticker BABA, that's the big, darling mega cap stock in China. It's a tech stock. $9.60 a share next year, and you got it pricing at $100 a share. So that's an 11 PE, Terry. So we talked about Tesla at 105 PE on a previous podcast, and now we're at a 10 or 11 PE. So there's just a ton of value, and this is a value score of A in the Chinese market. And we keep looking out for the stimulus, and analysts are then reflecting that in their assessment. So here's a classic example of where a government is talking and private market analysts are responding.
And then, did I pronounce that right? BID, BYD?
BYD is Build Your Dreams, Terry, in Chinese. Build Your Dreams is the most dominant electric vehicle supplier in the world now. They just passed Tesla on a quarterly basis, and they can make a $25,000 car for you that is already in the market called the Han. It's a sedan. So it's at $77 a share, and it was first brought to people's attention by actually Berkshire Hathaway, who puts a big stake in BYD. So take a look at BYD. You got $4.40 a share next year, and it's the $76 share stock. I've got a PE ratio staring back at me at 22. Again, that's a fifth of what Tesla is.
And then Siemens, I guess that's Siemens AG, right?
Yes, this is the German leader in industrial automation. They just did a big acquisition today, ticker SIEGY, and I've got a $97 share price with a target price of $112. And again, outside this country, you've got PE ratios that are far more attractive. This is a 15 PE with $606.40 a share in earnings next year. So gotta like a chart like this. Siemens has done extremely well after the pandemic because automation is one place people are really turning to get the productivity growth up.
And today is October the 31st for people following along on the calendar. Our chief equity strategist and economist, John Blank, on 3 quarterly steps of analysis on the economy. With John, I'm Terry Ruffalo. You can aim your portfolio for 24% per year or more, by the way. Zacks Investor Collection gives you 30-day access to all of our long-term private buys and sells for only $1. Go to Zacks.com/promo for more details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.